So at the start of a new week, run us through the sense you're making of the markets at the moment and some of your expectations for the week ahead.
Thank you very much, Alishia. I think the market will really pick up with fairly positive news that came out of Kenya Airways. It's a fairly influential stock on the stock exchange that's been through quite a tough time over the past year and a half maybe. I think there was a focus going into the results release on Friday of what the effect of continued labor unrest might have been on the company. So I think it would have been a positive surprise, well received by the market, that they were able to return such a strong performance. So I really think that would be the focus for the market going forward. But it's important to remember we are coming towards the end of the year and at a time when in this market we tend to see quite low volumes with increased volatility.
Of course, this is a market that's gained significantly here to date, and certainly it's optimism about what's to come in terms of economic outlook that's providing much of the impetus. Let's hone in on some of the stronger performances so far. We've had EGADS at the top of that list. It's around the 70 shilling mark and seeing strong runs. It's posted gains of 257.5% for the year so far. What's your take on the stock, especially in light of the news now that it has no involvement in this latest Tatu City project?
I think with EGADS, it really is one of the less traded stocks, and its rise has really defied expectations. You don't normally see such spectacular moves in that particular segment of the market. One, because it's an agricultural stock, and two, because it has been trading as one of the lower cap stocks. That said, we did see that very strong performance for much of the year, but I think it now falls into the classic adage, buy on the rumor, sell on the fact. And I think you will see many investors now begin to think about selling on the fact, now confirmed that they are likely to benefit going forward from this new development in Tatu City. So I think you will see a gradual loss of interest in that particular counter, because despite the fact that perhaps coffee prices are on the increase, agricultural stocks haven't really had much to write home about for a long time now. And now that the fact that Tatu City is unlikely to benefit this particular counter, I think you will see the market now begin to look elsewhere for excitement and return.
Well, like you say, you know, these agricultural stocks are pretty lowly traded, tightly held where they are as well. And with that, despite that, we've had Kakuzi coming in as second. I mean, we've got 168% one-year return being clocked in by that counter. It ranks third behind EGADS and ScanGroup at the Nairobi bourse. Are you buying in here if any of these players into any of these agri players, if you can get your hands on stock?
I think really when you're looking at stock investments, you want consistency and you want a certain element of predictability. So I do think the people who've been holding these stocks have a lot to be happy about. But I think in advising investors and in looking to be able to place bets on the market, you'd be looking for a little more certainty than an agricultural stock has been able to offer. That said, we've seen better rainfall for much of the reporting period that we'd be discussing. And I guess one would want to be hopeful at the same time, because agriculture is the bedrock of our economy, that you will see stronger performances from some of these counters. But yes, because of their close shareholding and their closed shareholding, I really think it's a pretty closed party to which there are not many entrants.
Let's take a look at the party that ScanGroup has going on there, because it's posted 189%. It's ranked second on the bourse in terms of year-to-date returns. What are you making of this rise? Is it all on the back of that African growth potential after its tie-up with WWP and Ogilvy?
I think that it's difficult to avoid that conclusion, but I think what ScanGroup has done particularly well is the strategy they've stuck to since they came to the market. When a company comes to the market and is able to raise new capital, investors are very keen to see how they deploy that capital. And I think the fact that ScanGroup has deployed that capital in acquisitions when compared to perhaps a company like Access Kenya that took a different approach, I think has been very well received by the market. And really that's all they've been able to do, is acquire other companies. And I think the market seems to believe that that is the way to achieve growth in that particular sector, perhaps believing that there's not much organic growth left in that market, but that inorganically they could grow by acquiring other companies. So it is a positive move, and the market has rewarded them for it.
Kingori, if you're looking at more broad-based growth in terms of your returns on investment at the Nairobi bourse, would you be looking to a player like Centum? It's rallied over 155% this year so far, and given its broad-based activity and the kind of activity we're seeing on the bourse, would you be a buyer in Centum right now?
I mean, as Drummond Investment Bank, we actually have been very positive, and you could even say bullish about Centum. But this is in the long term, and we must say that the market tends to be dominated by shorter term trends. And I think with the announcement from Centum about 3-4 months ago that they're likely to pay dividends for the next 5-year period as they focus on new growth opportunities would probably square away the average investor. But in terms of the medium to long term, it is a very strong stock. It's a tracking stock because it does cover most of the market as well as being involved in private equity. So I think you would expect to hear very good news from a counter like Centum in the medium to long term.